Dan, and I'm going to go over what the 5 most common reasons why people get their homes foreclosed on. Okay, number 5, divorce or separation. Right now, with the real estate market, it's so expensive, it takes 2 incomes to purchase a home and pay for everything. That includes insurance, which has gone skyrocket, property taxes. Now all of a sudden, you've got the 2 people and they're separated. They're divorced. Wow, I don't know what to tell you. Well, just try to follow my philosophy in life. Happy wife, happy life, and it's cheaper to keep her. Okay, number 4, negative equity. This is when you're underwater. That means your loan is more than what your house's value is. There can be a sudden drop in the market. A lot of times it's a strategic walk away from it. So I'll give you an example. Again, I bought that home in Modesto in 1992. The person that bought it from KB Home paid, I think it was about $135,000 in 92. Now all of a sudden in Modesto, I think it was 4 or 5 years later, there was a huge flood that hit the neighborhood. The home did not get hit with the flood, but the neighborhood did. So it dropped the values down to, I don't know, 85, 90,000, 6, 7 years after it was built. So all of a sudden, Joe Six-Pack like me comes around and purchases a home as a foreclosure. Well, that person, before they were foreclosed on, purchased a home up in Sacramento, about an hour and a half away. So they were able to purchase their second home. And as a result, they walked away from the home in Modesto. It was strategic. It was negative equity. Okay. Number 3, excessive debt. A lot of times people, especially now, playing this little shell game with the credit card game. Robbing Peter to pay Paul. Great. It's kind of like musical chairs. You can only go around a certain amount of time until you run out of chairs and you can't find a seat. Then you get that call or you get that letter, and the shell game is over. You cannot buy another credit card. They're saying, nope, you're cut off. That's what happens. Number 2, the ARMs, the adjustable rate mortgages. Great, you found this 3% loan. Everything is wonderful for the first 5 years. Well, guess what, Cinderella? It struck midnight. Now it's year 6, and that 3% loan is now 6, 7, who knows, 8%. The way things are going right now, you can't make the payments. Everything else is expensive. Groceries, again, go over insurance. If you haven't seen your insurance, good luck if you haven't renewed it in a while. I have, and I did not like what I saw. Property taxes, they seem to just keep going up and up and up. Seems like in California, we just keep passing these laws. They sound great. We're going to help all these new programs. Well, guess what? Someone's got to pay for it. It's people like me and you, Joe Six-Pack. Number 1, financial hardship. Some people get sick. Some people get laid off unexpectedly. Some people, unfortunately, death that can occur. It's horrible. And that's why the only thing I can really say to myself and probably pass it on to others is try to live below your means. I know it's easier said than done. Try to pay cash if you can. If you just pay for things that you need, not that you want. And do not try to keep up with the Joneses. I know it's easier said than done. Okay, life isn't over after foreclosure. Remember that. I know situations where friends and family, where they lost their home, things were looking down, they were looking bleak. Guess what? You might be down, but you're not out. It takes 7 years to get out of those holes. You can get back, as I say, back on the horse. You can do this. Don't let one minor setback destroy your life. It can happen when you get knocked down, but you can get back up and get this thing going. Okay. Well, if you can't, please like and subscribe in the comment section below. And again, don't hate on me. I'm just a man with a mullet and a dream. Thanks a lot. Peace out. Goodbye.